think we are witnessing a remarkable shift in ASEAN, its progressive domestic financial landscape. Today, I'd like to delve into a topic that has gained significant attention in recent years: the rise of ASEAN local currency bond market. We all remember very clearly, actually 25 years ago, the Asian financial crisis dealt a huge blow to regional economy. And after that, people recognized the importance of a more balanced, more sophisticated financial structure with local currency bond as one pillar of that structure. So ASEAN is slowly reaping the fruits from the decade of learning and implementing all those policies and programs so far. So resilience and growth are the two words that aptly describe the ASEAN local bond markets. Despite the challenges we have experienced, the ASEAN local bond markets have continued to grow. Let me share a few numbers. Okay, so from the Asian bond online, so total bond market of ASEAN was 45% of the GDP in 2005. So it basically 2 decades ago. And this ratio grew to 63% in 2023. And what is even more remarkable is in the corporate bond sector, which has seen its growth from a mere $103 billion in 2005 to $569 billion in 2023. So it's a remarkable progress. And so we can see that ASEAN no longer sees the bond market as a concept. We see its effects on the real economy and the positive change in our society. And I think that is one of the reasons that this region has been faring much better through the pandemic and through the very high US dollar interest rate environment. So we see the advent and influence of the digital platforms to make the bond financing much more efficient also. So local bond market has proven to be a beacon of stability during turbulent times. They have offered investors a diverse range of opportunities with varying risk profiles and attractive yields. So among the important characteristics I would like to mention, number one is certainly diversification. I think local bond markets are having different investor group. And with the group of this market, the issuers have access to much wider and different investors. Certainly, another important thing we all remember is currency hedging. I think that this is beneficial to both issuers and investors as well, as we see the economic growth require a much larger amount of financing. And we also see strong fundamentals. So many economies in the region have demonstrated very good performance, which is very supportive of the credit worthiness of the local issuers. And I think I also recognize there is a much wider recognition of the credit worthiness of those local issuers. And also, we noticed there has been very strong policy support from various governments. The market has been man-made and in this part of the region and has been supported by progressive regulatory actions. Although I also have to recognize that some of the governments need also to learn from their mistakes, and I think that they can build on those mistakes on the condition that they really can learn something from that.